US employment is struggling, bond and stock markets are in the red. Bitcoin is struggling, Ethereum is bleeding, and funds are flocking to Solana. How long can the crypto ETF last? Sun Yichen's tokens were frozen, the 9 founders were all gimmicks. Is WLFI the Trump coin harvest 2.0? The US stock market is facing the September decline curse. Can the Federal Reserve save the market or add to the chaos? The US Securities Exchange Act is going to be amended. Will cryptocurrencies be able to be listed on formal exchanges? 12 million people in Japan are playing with cryptocurrencies. Can the FSA's changed framework really control this ant army?
Friday, September 5th, BitcoinTV English channel. Where is the coin chain? I am Michael. Let's first look at BYBIT, the title of the 24-hour cryptocurrency data headlines. BYBIT, born for professional traders. Scan the QR code to register BYBIT and get instant discount on transaction fees 20%, which is equivalent to a 20% discount on the handling fee. BYBIT, doing a WS alt. The trading competition has a total prize pool of $1,000, $10,000, so you can give it a try. US data has faltered again, with initial jobless claims exceeding expectations at 237,000. The small non-farm payroll report was even worse, with only an increase of 54,000, significantly below the expected 65,000 and halved from July's 104,000. As a result, US Treasury yields fell to 4.18%, boosting the bond market and sending all 3 major US stock indexes into the red. Investors, seeing the risks as excessive, immediately slammed the brakes on crypto ETFs. Bitcoin spot ETFs saw a net outflow of $223 million on September 4th, with Grayscale losing $22.4 million, Fidelity withdrawing $170 million, and ARK losing $125 million. Even BlackRock's generous $1.35 billion injection couldn't reverse the overall decline. The Ethereum spot ETF is in even worse shape, having suffered 3 consecutive days of losses, with a single-day outflow of 167 million yuan and a total outflow of 340 million yuan this week. Bitwise saw a loss of 45.7 million yuan, Fidelity withdrew 217 million yuan, and Vanek withdrew 17.2 million yuan. Although BlackRock added 149 million yuan, the overall situation is still struggling. Clearly, the job market is sneezing, risk appetite is catching a cold, and the cryptocurrency market is inevitably suffering. In the short term, is there any hope for a recovery? Unless the Federal Reserve takes drastic measures, the market will continue to fluctuate within a range. Bitcoin is currently playing a game of tug-of-war. The liquidation map is clear. 1.508 billion in long orders are piling up below $108,000, acting like a wall. 1.297 billion in short orders are pressing down above $113,000, tightening the screws. As a result, Bitcoin is locked in a volatile stalemate around $110,000, with neither side yielding. If it holds $110,000, it could surge to $120,000. If it fails, it could plunge directly to $100,000, potentially leading to a roller coaster of losses that could wipe out traders instantly. Simply put, the market is now at a tipping point, with leverage piling up like dynamite at key price points, poised to ignite at any moment. Traders, don't just think about going all in. Keep your position small and set stop-loss orders firmly in place, or you might wake up to a forced liquidation alarm. Solana has become a new institutional favorite recently. As of today, 13 institutions have formed a collective position, totaling 8.887 million SOL, directly accounting for 1.55% of the circulating supply. Of these, 585,000 SOL are pledged, with a book value of $104.1 million and an annualized return of 6.86%, which is a surefire way to make money. As for the big players, Sharp's technology holds 2.14 million SOL and is firmly in the lead, while DeFi Development Corp also hoarded 2.028 million coins, and Upexi. This is a true force, increasing its holdings by 15.3% in a single month, grabbing headlines. CYFRF wasn't far behind, adding 12.4%. Overall, SOL holdings surged from 8.3 million to 8.887 million in a week, a clear sign of buying more as the price drops. The current SOL price is $203.48, up 2.3% in the past 24 hours. While funds are piling into Solana, Ethereum spot ETFs are bleeding cash, creating a virtual house-moving rotation. If this trend continues, SOL could become a dark horse in the midterm market. Please like and follow us for the latest developments in the cryptocurrency, blockchain, and mining circles within the past 24 hours. Click the bell to join our channel and become a member, receiving your wealth code Monday through Friday. The cryptocurrency world is full of familiar scenarios. Back then, the Trump family reaped huge profits with the Trump project, and now with WLFI, the red flags remain glaring. Let's first look at the premise. The 9 co-founders are simply a gimmick created by scrambling numbers. The team lacks a single contributor. They're all just there to make up the numbers. The Trump family? Don't overthink it. They're just billboards, shouting slogans and generating buzz, with absolutely no operational or technical involvement. Do they understand crypto? They probably can't even tell the difference between a wallet private key and a verification code. But when it comes to scamming people, they're absolute experts.
In the WLFI project, the Trump family bears no legal responsibility, yet they hold a 22.5% stake in the supply and receive a whopping 75% of the profits. The Witkoff family, in turn, holds a 7.5% stake and 25% of the profits. As for the $1 stablecoin issued by WLFI, its current market capitalization has reached $2.7 billion. While seemingly impressive, it's actually inflated, because it relies primarily on capital allocation from large institutions rather than real user demand. 93% of its value is concentrated on the Binance exchange, indicating that it's far from being adopted in real-world scenarios.
We have our own independent stablecoin.
Yeah.
It's called USD1. It's currently the fastest growing stablecoin in the world.
But still pales in comparison to the Tether coin or the Circle coin.
We're growing quite quick, Joe. We've reached $2.2 billion in market cap in just under 90 days. It took our competitors, like you said, Circle and Tether, about 3 and 5 years respectively to get to those numbers. And we also trade about $500 million of volume a day.
The drama continues. Justin Sun, a die-hard supporter and advisor to World Liberty, recently invested $75 million in WLFI and pledged an additional $100 million in Trump tokens. This year, he even graced the stage with his Trump tokens at a dinner with President Trump. However, Arkham revealed he holds a total of 545 million WLFI, valued at over $100 million. This morning, World Liberty abruptly blacklisted him, freezing 540 million unlocked and 2.4 billion locked tokens, instantly making him the blacklisted largest shareholder. Sun hastily clarified that this was merely a test deposit with decentralized addresses and no trading involved.
After the incident, WLFI rebounded slightly to $0.189, with a market capitalization of $4.65 billion, narrowing its 24-hour decline to 13.8%. Justin Sun had previously purchased $75 million in WLFI and pledged to buy $100 million in Trump tokens. He also attended the Trump dinner as a major Trump investor.
WLFI is nothing more than Trump 2.0, a meme coin in a new guise whose only stable function is profiteering. The official website is riddled with disclaimers, typos, and broken links, resembling an intern's PowerPoint presentation. The script was already written. The characters have simply changed. Who will ultimately take over? The answer is likely retail investors with short memories. On Wall Street, the September curse has become a familiar trope. Over the past 70 years, the S&P 500 has averaged a 1.1% decline in September, with the Dow Jones Industrial Average falling a similar 0.8%, making it the weakest month of the year. This time, however, the situation has only gotten worse. The August ADP small non-farm payroll data showed a mere 54,000 jobs added, significantly below market expectations of 65,000 to 68,000 and halved from the revised 106,000 in July. The job market suddenly shuddered, and investors immediately realized the Federal Reserve would likely have to accelerate its pace of interest rate cuts, otherwise the economy could truly fall into recession.
In the previous phase, the Federal Reserve eased the financial crisis through interest rate cuts, driving both value and growth stocks to advance. Looking at the crypto market, BitMine chairman Tom Lee reiterated that Ethereum presents one of the most significant macro trading opportunities in 2025. He noted that Ethereum has rebounded from its yearly low of $1,300 and has remained range-bound around $4,400 after reaching a new high. The longer the consolidation period, the greater the potential for subsequent gains. His core thesis is that Ethereum's pullback is not a sign of weakness but rather a buildup of momentum for a stronger breakout.
The Ethereum staking market has been quite dramatic recently. Veteran OGs cashed out at $4,000 and fled, leaving a queue of people waiting to unstake their stakes. Meanwhile, new entrants are the massive funds that have been clamoring for institutional hoarding of Ethereum this year. As a result, veteran players are reducing their holdings while institutions are buying in, and the selling pressure is slowly being absorbed by the market. Following this trend, Ethereum is likely poised for another major move. However, focusing solely on the blockchain isn't enough. The broader macroeconomic environment is crucial. If the Federal Reserve and US dollar liquidity don't cooperate, even the strongest Ethereum will be vulnerable.
The new SEC regulations sound very attractive. Will crypto platforms finally no longer have to live with their tails between their legs? From MTGOX to CoinCheck, bloody histories have forced out hell-level new regulations. Can Japanese projects survive?
U.S. Securities and Exchange Commission (SEC) under the Biden administration is known for its ironclad management. Former Chairman Gary Gensler issued a frenzy of fines upon taking office. Ripple was dragged through 3 years of legal battles and Coinbase was sued daily. The market lived in constant suspense, unsure when its turn would come. But things have changed. With Trump's return to the White House, policies have shifted dramatically. Crypto-friendly Paul Atkins has taken over the SEC, and the atmosphere has instantly changed. Atkins recently unveiled a new regulatory agenda, and the market is watching closely. Will this truly usher in a crypto spring, or will it be a different approach to harvesting?
It's very common when there is a change of power for the chair of the SEC to step down at the end of the Congress and the end of the presidential term before the inauguration. And so, we're certainly very excited to see him leave. It has been a really difficult couple of years for the industry. We felt like we've been boxed in the corner with his regulation by enforcement approach.
Recently, the United States SEC about 20 proposed rules were released. The crypto sector focused on 2 points. One was to establish specific exemptions and safe harbors for the issuance and sale of crypto assets. The other was to amend the Securities Exchange Act to allow crypto assets to be traded on national exchanges and alternative trading systems, ATS compliance transactions. In addition, there are plans to adjust the brokerage-dealer financial responsibility rules to reduce the data reporting burden on crypto companies.
The old US SEC rules were incredibly restrictive, requiring crypto platforms to implement Know Your Customer (KYC) and anti-money laundering (AML) regulations. However, due to inadequate technology and flawed models, many platforms simply couldn't implement them. Now, if the new rules are truly implemented, it will be a welcome relief for crypto projects. Significant compliance costs will be saved, and there will be no need to worry about being hounded by lawyers' letters. However, the SEC still has to go through the necessary procedures, including receiving feedback and undergoing several rounds of review. Whether they can actually be implemented remains a question mark. Let's just watch and closely monitor the SEC's next moves. The Japanese crypto market truly embodies the principle of strength in numbers. The number of accounts has surpassed 12 million, meaning nearly 1 in 10 individuals is actively investing in cryptocurrencies, with total funds reaching 5 trillion yen, approximately $33.7 billion US. However, a closer look reveals that this market is still dominated by retail investors, with 80% of accounts holding less than $675 US, a true battle won by an army of ants. Even more interesting is that among those with investment experience, 7.3% have invested in cryptocurrencies, a higher percentage than those involved in forex and bond trading. Seeing this hot market, Japanese regulators have even tried to make a presence felt.
Japan Financial Services Agency FSA, the report recommends shifting the cryptocurrency regulatory framework from the Payment Services Act to the Financial Instruments and Exchange Act. The reasoning is that the current model is no longer sufficient to cope with the rapidly expanding market, with vague white paper information, a proliferation of unregistered exchanges, frequent fraud, and ongoing hacker attacks. The FSA also emphasized that Japanese retail investors generally have low risk tolerance, are accustomed to small investments, and cannot withstand high volatility. Since these issues are similar to the characteristics of the securities market, the FSA, the report argues that securities regulation should be applied according to securities logic. Although the report has not yet taken effect, it may form the basis for future legislation.
The Japanese cryptocurrency industry has a long and arduous history. In 2014, Mt. Gox lost 850,000 bitcoins overnight, and in 2018, CoinCheck was hacked for $530 million, leaving regulators in a state of PTSD. This time, the FSA is changing the script, moving the regulatory framework to the Financial Instruments and Exchange Act. This is both to prevent a repeat of history and to align with the EU's MiCA and the US SEC to avoid falling behind in the international competition. The problem is, if this were to actually happen, it would be disastrous for project developers. Coin issuance would require open ledgers, obsolete all formalities, and compliance costs would soar, creating a pressure comparable to hell. Exchanges reacted in two different directions. Bitflyer and GMO Coin felt it would improve trust but were concerned about the cost, while Binance Japan and Coinbase Japan simply declared that cross-border transactions are too difficult. However, this is a positive for retail investors. Opening an account would be a bit more complicated, but at least they no longer have to worry about waking up to find the exchange has run away. Japan is really going to carry out a crypto cleanup this time, and it is hard to say who will have the last laugh.
On September 5th, after a meal, the government issued a warning. Chip manufacturers should not try to hide. If they haven't entered the US market, they should prepare for the tariff stick. This wave of operations is simply a matter of increasing tariffs while eating, and the momentum is perfectly controlled. After being blacklisted by Justin Sun, Big Brother Huang Liqing went all in with a 5x profit margin, now holding 10 million tokens and $1.82 million US. Scared off others, he went all in, a true example of a leverage-hardened guy. Whale Alert just broke the news that someone directly sent 10 bitcoins, worth $1.1 million, the cryptocurrency world's version of the flash delivery guy. Steady, accurate, and ruthless. 2 billion USDT suddenly appeared on Ethereum. Could it be that Tether is printing over time again? Zio Paulo Ardoino debunked the rumor, saying, "Don't panic. This is just Binance moving 2 billion from Tron to their own. It's like transferring money from one pocket to the other, no more, no less." Pump.fun over the course of a week, $12.19 million was spent on Pump, accounting for 98.23% of revenue. Consequently, circulating supply decreased by 5.363%, a further 1.102% reduction from the previous week. This wave of manipulation is like a weight loss boot camp for tokens.
Okay, that's the main content of today's program. Our channel focuses on valuable news in the cryptocurrency, blockchain, and mining circles, including news information and in-depth special reports. If you think our channel is valuable, you are welcome to forward and follow us. You can also become our member and receive the member wealth code from Monday to Friday. Let's get rich together and add a zero to our assets in the bull market. See you tomorrow.